Hello, welcome to Forex School Uganda. I am Godfrey. Today we are going to be doing a top-down analysis on the EURGBP currency pair to see where price is at right now and where we anticipate it to get to in the next coming few hours, days, and potentially maybe a few weeks to come. Now, if you're new to the channel, kindly subscribe, like and share the video. Keep on the lookout for more educational content that comes dropping in on this channel so you do not miss out on anything that will help you in your own trading journey. Now, we're going to be doing this top-down analysis, breaking down market structure from the higher time frames down to the lower time frames, and we do that looking at the monthly time frame, then the weekly time frame down to the daily, before we can then think of executing our trades from the 4-hour time frame for swing trades, the 1-hour time frame for the day trades, and 30 minutes and 15 minutes time frames for our quick scalps for the day. Now, looking at this monthly time frame, we see that price had formed an area of support here, which price was able to break through to the downside. Then it formed another area of support here. Now, price was also able to break through it to the downside. It also again formed another support area here, and price was also able to break through it to the downside. So this informs us that since price is breaking structure to the downside, it is technically in a downtrend. When you look at this, when price is in a downtrend, it keeps making a series of lower highs and lower lows, lower highs and lower lows. What we see from this current chart is that this was a high right here, and price started making lows, and this low is lower than the previous low, making this a lower low. Now, made a new high, this high is lower than this high, making it a lower high, then a new lower low, a new lower high, and then currently price is in the process of completing a new lower low, which indicates to us that the market is downtrending and the structure of the market is bearish. But one thing to note is that price is currently coming into this area of support right here. So we could see some rejections of price from this area here in the near future. But as it stands right now, it is bearish. So we are going to drop down to the weekly time frame to see what perspective it gives to us. Now, this is the weekly time frame. What we see from this weekly time frame is that, first of all, price is coming into this area of support right down here. It actually reached this support area right here, rejected, and price was pushed to the upside. But this push to the upside brought price into this area of rejection that was created before. Mark it out maybe for your easy visuals. If I zoom in a little bit, now just beyond the fact that this is a resistance, this is a support area down here, you can see that price moving to the downside has been forming a series of lower lows and lower highs. It's a low that is lower than the previous low. And this is a high that is lower than the previous high, which makes it a lower low. And now it made a lower low here, a new lower high. Now it formed a new lower low, and currently it is completing the new lower high right here at this area of resistance. Also, in moving to the downside, price had moved impulsively, breaking through this support area, now turned resistance, into this new support area, and after testing this support area, it was bounced off, retracing to the upside to come into this resistance area to finish what we know as the correction after an impulsive move. And after an impulse and correction in the market, what do you expect? We expect another impulsive move in the market to complete what we know as the impulse correction and impulsive move in the market. Now, that tells us that the weekly is now currently, the fact that it's currently in the next impulsive move to the downside, it is also technically bearish. So alongside the monthly, the combination of the two charts giving us the same vibes means indicates to us that the market is bearish, and so our sentiments should be bearish as well, and we should be on the lookout for sell or short setups in the market to take advantage of as price drops to the downside. We are going to go down to the daily time frame to see what perspective it also gives us, whether it rhymes the same way with the monthly and the weekly time frame, or it is giving us a different picture. We want all these three time frames to rhyme together, as well as certain confluences to come together to inform our decisions before we can think of executing our trades in the market. So we'll drop to the daily to see what perspective it gives us. Now, this is the daily time frame. I also want us to dissect it like we have done the other higher time frames, the monthly and the weekly. Now, when you look at this time frame right here, you see that price has also been making a series of lower highs and lower lows. And currently, it's in the completion of the formation of the lower high before we can expect another lower low move to the downside. Also, the other thing to notice is that while price was moving to the downside, we expect a correction, which it actually did right here with this leg to the upside. And now after an impulse and correction, what do you expect to see in the market? We expect another impulsive move in the market to the downside to complete what we know as the impulse correction, an impulsive move in the market. Now, the other thing I wouldn't want you to miss is that while price was moving to the downside and also moving to the upside to correct the move to the downside, filling up the gaps while it was retracing to the upside, it left behind in between this level here a bearish close. Now, this bearish close led to the formation of what we know in the market as a W formation. And after a W formation, we expect a retracement or a move to the downside to come and retest the neckline right here to complete the W formation. So we are expecting another move to the downside to come and retest this neckline right here to complete the W formation, which really indicates to us that the market is bearish and we could expect more bearish moves in the market, at least to come into this level right here, this level of support. And so we could drop down further to the 4-hour time frame to look out for swing trading opportunities, then the 1-hour forward-day trading opportunities, then also lastly the 30 minutes and the 15 minutes time frames for our quick scalps in the market. We do not trade the market randomly. We sit around and wait for those setups, price patterns and price setups that suit our entry criteria before we can think of executing on any kinds of trades in the market. So that's it for now. Thanks for watching, and if you're new to the channel, kindly remember to subscribe, like and share the video, and also remember to turn on the notification icon so you're alerted every time that I post new content on the channel, so you're able to get it at the earliest. Probably to help you in your own trading journey. Thanks for watching once again, and I'll see you again.